So, good evening once again. I said today we want to discuss or do a little introduction about strategic financial management. And I said earlier that before we can think of strategic financial management, we need to think of financial management. And as it is, financial management is a wide subject. It's a wide what? Subject. It's a wide subject. So if I say wide subject, what I'm insinuating is that it brings together much of the materials that are found in other subjects. That is why we say financial management is a wide subject, because it encompasses much of the materials that are found in other subjects. And these materials that are found in other subjects uses other discipline as well as a tools. So financial management uses materials that are found in other subjects and also the discipline as a tools. Now, before we can now talk of strategic financial management. So strategic financial management, which is the SFM, according to what's it called? SEMA official terminology, that is Chartered Institute of Management Accounts, define strategic management, or it sees strategic financial management as the identification of the possible strategic capable of maximizing an organizational net present value. That is what SEMA terminology sees strategic financial management. It sees financial management as what? The identification of possible identification. Hello, are we there?
Yes, sir.
Hello.
We are here, sir.
Hello, are we there?
Yes,
Okay.
sir.
So, SEMA official terminology, which is I said Chartered Institute of Management Accounts, sees financial management as the identification of the possible strategic capable of maximizing and what organization net present value. I'm in class. Capital resources among competitive opportunities. Are we there? Hello? So, as I was saying, we also need to look at the subject that we said financial management use as a discipline. Yes. I said financial management because if you go back to what I said earlier, I said financial management identify the possible strategic capable of what? Maximizing and what? An organization net present value. And if we think further, I said financial management. You know, before we said strategic financial management, I've already explained what financial management is. That is, I said it's a wide subject because it uses other disciplines as a tools. So one of the subjects that we can draw or relate to the financial management is that number one, financial accounting. Accounting, that is, financial management use financial accounting tools. That's why we said financial management is a wide subject. Also, we also draw on related subjects such like management accounting, such as the law, economics, what's it called? Quantitative method. So all these are subjects that financial management use as a word, as a tools. Are we there? Hello? Hello?
Hi.
We are
So,
with you, sir.
okay, having said that, we can draw a conclusion for everything that we just said. We cannot draw a conclusion that we can draw a conclusion that we can draw a conclusion that the what's it called? The financial manager, after we said all this, we can draw a conclusion that financial manager need to have a good knowledge of what? Financial accounting. Because when you said, when we mention financial manager, because we've already said financial management is a wide course that covers or use other disciplines from other subjects, such as financial accounting, management accounting, law, economics, and quantitative methods, and behavioral science. So, if we want to draw a conclusion, we can draw the conclusion that as a financial manager, you need to have a good knowledge of financial accounting. Do you get my point now? So, as a financial manager, you need to have a good knowledge of what? Financial accounting. As a good manager, you also need to have a good knowledge. What's it called? Good knowledge of management accounting. You also need to have good knowledge in terms of a law and economics. So when you have all this knowledge, it will assist the financial management to discharge its function and require effectively. Is it clear? Hello.
Hi.
Yes, sir.
Can we move on?
Yes, sir.
Yes, sir. Yes.
So, if I may throw this to all of us, what can you deduce from the topic strategic financial management as as part of the introduction that we did just now? Who can assist us that what financial management entails and what area the financial management use as a tools? What other subject the financial management use as a tools, and as a result of that, what is it serve in terms of benefits to the financial manager? Who can help us? In summary, please. Hello. Hello, are we there?
You said that financial management is a wide subject, and that it uses other subjects as a tool. Subjects like financial accounting, management accounting, law, economics, quantitative method, behavioral science, all together to be able to maximize organizational profit.
Okay, thank you. And all these subject that we mentioned, how does it really help the financial manager?
It helps managers to have a good understanding of everything happening and how to manage every of those informations in order to ensure maximization of profit.
So who can try
Well,
as well?
to my understanding, I think all these subjects, financial accounting, management accounting, law, and economics, assist the financial manager to strategically maximize the organization profit. Thank you.
Okay. Who also can say something towards that? Okay. Having said that, let's look at the basic what's it called, objectives of financial management. The basic objective of what? Financial management. The basic objective of financial management. When we talk about the basis of financial objective management, what we are actually saying is that it is generally uh, agreed that the financial objective of the firm. So when we are talking of the basic objective of what? Financial management, we can see it from the angle that it is generally agreed. It is generally what? Agreed that financial objective of the firm should be maximize of the owner economic welfare. So that is the what's it called? The generally believed that when we talk about the financial objective, we actually seen it as how the firm should be what? Maximize the economic welfare. That is how it can maximize the owner economic welfare. Owner economic welfare. But as it is, it is also a disagreement. You know, we see it from the angle that it is generally agreed that the financial objective of the firm should be the what? Maximization of owner economic welfare. However, there is a disagreement as how the economic welfare of owners can be what? Maximized. So there is what? There is a disagreement towards that. That is how the economic welfare of owners can be what? Maximized. So what I want to also talk about is that we have two well-known. Two what? Two well-known. And that two well-known are some of the criteria which are put forth for this purpose. Number one is that I think you must have heard this before. Profit, what is it called? Profit maximization. Maximization. Two, what is it called? Wet maximization. Wet maximization. We talk about profits maximization and also what's it called? Wet maximization. These are the two well known. That's why we said two well known, which are put forth for this purpose. Profit maximization and what? Wet maximization. So we are going to explain it one after the other. When we said profit maximization as a primary objective, let's say profit maximization as a what? Primary objective. Profit maximization as a what? Primary objective. So when we now say profit maximization as a primary objective, it means that the objective of financial management, the primary objective of financial management is to what? Is to maximize the what? Is to maximize the profit. Now, because the reason why we think so is because the business has been considered as an economic institution. Are we there? Hello? Hello?
Yes, sir. Yes, sir.
Okay. The reason why we think of profit maximization as a primary objective is that because we see the business we consider the business as an economic institution. So, as such, it has developed, because when we talk about the profit maximization as a primary objective, the reason why we actually focus on that the profit maximization has to be a what primary objective of what financial management is, because we consider the business as an economic institution, and as such, it has developed a common and unique measurement of effectively their profit. So, having said that, the rationale behind it is that we assume profit maximization as a natural business objective. That is our assumption. That's the rationale behind it. That if you ask everybody at any point in time, even though according to the layman, the rationale behind it is that we assume that profit maximization as a what? It has served as a what? As a natural business objective. So, another thing that we also need to talk about is that of what's it called? Wealth maximization as a primary objective. Wealth maximization as a what? Primary objective. Wealth maximization as a primary what? Objective. So now, when we talk about wealth maximization as a primary objective, the use of what's it called? The use of objective of wealth maximization, or we can say net present wealth maximization. So where I'm going to is this: if we mention wealth maximization, what does that mean? The wealth maximization simply means maximizing the net present value or wealth. That's what I mean by wealth maximization. When you maximize the net present value or what? Or wealth. That's what I mean by wealth, what's it called? Maximization. And not only that, we are still going to talk about what's it called? The shareholder, sorry, the stakeholder theory. The stakeholder theory. The stakeholder theory. The stakeholder theory. So if we talk about the stakeholder theory, the traditional view of it, when we say stakeholder theory, the traditional view of it is that the firm is run in order to maximize the wealth of the what? Of the shareholder. So that's what they mean by the stakeholder theory. And another word for saying stakeholder theory, we can say corporate wealth maximization. We can say what? Corporate. We can say corporate wealth maximization. So we can say stakeholders theory, which is known as what? Corporate wealth maximization. And I said the traditional view of this stakeholders theory is that the firm is run in order to maximize the wealth of the shareholders. So, not only that, there's another one. What's it called? There is an alternative view. There's an alternative view that the firm is a what? Is a what's it called? Coalition of different groups. Coalition of different groups. That's the alternative view of it. Number one, that coalition of different groups, we are talking about the equity shareholders. Coalition of different groups. That is an alternative view. You know, I said the first view under stakeholders theory is that traditionally we view it as that the firm is run in order to maximize the wealth of the shareholders. And also, we also said there is an alternative view that the firm is a coalition of different groups. And that coalition of different groups, and what we meant by coalition of different groups is that the group like equity shareholders, preference shareholders, lenders, employees, suppliers, customers, government, and the what's it called? The community. So all these groups that we mention, each of them must be what? Must be knowledge and paid a minimum return. All these groups we mentioned earlier must be what? Must be knowledge and paid a minimum return. The reason why we said we are paying them a minimum return is that since the withdrawal of their contribution, withdrawal of their contribution may lead to the closure of the company. So if all these people withdraw, that is what I'm trying to explain, that if the withdrawal, or if you see the withdrawal, that is, when you see that withdrawal of those groups, if you see their withdrawal of their contribution, if you see that this withdrawal can lead to what? To the closure of the business. So then, any excess wealth created by the firm, any excess, that is, the excess wealth created by the firm has to be subject of bargaining between the groups. So because if you are not doing that and all these groups withdraw their contribution towards this business, definitely the business may lead to the word closure. Are we there? Are we getting it? Hello?
Yes, sir. Go on, sir.
Hello? Are we there?
Yes, sir.
Okay. So another thing that we also need to talk about, we call it what's it called? Agency theory. Agency theory. Agency what? Theory. When we say agency theory, is that How will I explain this for you to get it clearly? When we said agency theory, a possible conflict can arise when ownership is separated from the day-to-day management of an organization. So you know what we refer to as conflict. So conflict can arise immediately. The ownership is what separated from the day-to-day management of an organization. But if we use a large company as a case study, the large company, that is a big company, the shareholder of that company are likely to be what? Diversely held. Diversely what? Held. And the action of the shareholder are likely to be what? Restricted. In when we say restricted, until when we look at it, and when we look at it in terms of practical terms, that is the practical level. And also, when we look at it, we also need to understand that the responsibility of running the company will be with the board of directors. When we also look at it critically, we discover that the responsibility of running the company will be with the board of directors. That is, the running of the affairs of the company, the responsibility will be with the what? With the board of directors. And this board of directors, who may only own a small percentage of shares in issue. So when we think of that, management, what do you think that manager of a company, what do you think that the management of the company are to the company? Because the management of an organization are essentially agents for the shareholder. Where all this manager of the organization that you see, they are what? Essentially agents for the shareholder. When you see the manager, probably manager in Dangote, manager in Bua company, all these big company, the manager of such organization are what? Are essentially agents for the shareholder. The reason why we call them agents of the shareholder is that they will be tasked. If they are tasked, the reason why they are taxing them is that they will run the organization in the shareholder best interest. That's why we call them agents of the shareholder. The manager of an organization are what? Essentially agent for the what? For the shareholder. Because they will what? Being tasked with the running the organization in the shareholder best interest. Now, not only that, we are looking at it from the angle of the manager now. So let us now look at it from the angle of the shareholder. Because the shareholder have little opportunity to assess. Shareholder, we only have little opportunity to assess whether the manager are acting in the shareholder best interest. You understand? Because that's why we call manager as a what? Agent. So if we call manager agent for the shareholder, because there's no way they are going to run the organization in the shareholder best interest. And I said, let us look at the angle of the shareholders as well, because the shareholder we only have the little opportunity to assess. The opportunity for them to assess that manager, it will not be that much. It's just a little opportunity to assess the manager, whether what they employ the manager for is actually what he's doing. Because their belief is that we employ you so that you will run the business. You will run the business of that organization to our best interest. So the shareholder can only have the little opportunity to now assess those things, whether the manager are acting in the shareholder's best interest. Are we there? Hello?
Hi.
Yes.
So, any question before? I think we have less than 10 minutes to round it up. And anywhere we stop, we continue in the next class. So, any question? Hello? Hello?
None for now for me, sir.
Okay. So, another thing that we also need to discuss is that the area, the core areas in financial management. When we say the core areas, we are talking of the core decision areas. The core decision areas. Sorry, core decision area in financial management. Number one, core decision area in financial management, we call it the acronyms, we call it IFD. Number one, I stand for investment decision. I stand for investment decision. 2, which is F, stand for what's it called? Financing decision. 3, which is what? D, stand for what? Dividend decision. Dividend decision. So, in our next class, we are going to continue from here and give explanation in each areas. So, thank you. Any question? Any question?
None, sir. None for now, sir. Thank you so much for your time, sir.
Okay, so in the absence of no further question, I wish you good luck and also try as much as possible